to bring in Kevin Green, senior markets correspondent, to help set up the action today. So, KG, we finished mixed yesterday, but the S&P 500 kind of continues to flirt with these records. Let's talk about, big picture here. What are you watching in terms of, do the bulls still have control?
Bulls still have control, but what you want to see today is a little bit more participation from a sector basis. If you kind of look at yesterday, we did see outperformance when it came to the technology sector as well as communication services. And a lot of that's being brought up by Nvidia as well as some other companies here. But you did not see that widening of the market participation like we have seen in the past. And that's something that does happen from time to time. We are in a seasonal period where it does get a little bit weaker when it comes to volume. But what you do not want to do is really kind of stall out at these levels for too long, and that does kind of lead to a little bit of a loss of momentum here. We do have some economic data still on the calendar for this week that could continue to create maybe a little bit more of an environment for the market to move higher here. But yesterday, once again, a little bit mixed. You do see semiconductors really trying to outperform. Micron's earnings yesterday was actually really good. You did see it fade from its highs overnight, but you are seeing maybe some other semiconductor companies that are actually faring pretty well this morning because of some of the commentary that you were seeing. So maybe a little bit of uncertainty, maybe a little bit of a stalling out here, but one day doesn't make a trend. The bulls still have control until you start losing the 20-day and the 200-day moving average on the S&P 500. That's when you get a little bit concerned. Now, I kind of want to highlight here just for the viewers to understand, if they look at the E-mini S&P futures, those are making all-time highs, but there is a time value component that's within that futures contract. So we're still a little bit short. We're about 40 points away if you're kind of looking at the implied open for the S&P 500. We're about 40 points away from all-time highs for the S&P here. So I think, once again, we'll see how the market actually fares today. We have initial claims coming out. We have PCE tomorrow. A lot that could still kind of give bulls a little bit more momentum trying to go into this weekend, and then hopefully trying to hit all-time highs by 4th of July here.
Okay, let's talk a little bit about something that has been in the atmosphere, this conversation that President Trump has been having about Fed Chair Jerome Powell. The rhetoric has been heating up, but now it's shifting to potential picks. And then you have this report out from the Wall Street Journal saying that he could be looking for names or floating names as soon as this fall. Now, Powell's term isn't up until May of 2026. What's the read-through on this, especially given the reaction? We're seeing the dollar under some pressure. How do we interpret this?
Yeah, I think it's more than just heating up, Diane. I mean, at this point, it's getting a little bit aggressive from the White House and President Trump's comments here. When he was at the NATO summit yesterday, made some comments around a potential replacement. He does say that he has a couple of people in mind, 3 to 4 candidates that he's weighing here. Now, according to this report, as well as Reuters kind of coming up with a preliminary list or potential list of candidates, you are seeing some members that are still within the White House. You also have Chris Waller that could be on that potential list as well. Scott Bessent, which obviously the market does appreciate. And yes, you are seeing maybe some dynamics actually taking place when it comes to the dollar. Maybe that's selling off just a little bit. I think that's also technical in nature as we get closer and closer to this Fed rate cut, potentially in September. Usually the dollar will kind of move to the downside because of that. And so I think there's also a couple of different dynamics. But you are seeing yields actually catching a bid, or basically bonds catching a bid, yields going lower. So the thought process is that whoever he does pick would obviously be on board for a little bit more of a looser monetary policy here. And that obviously would be beneficial for those within the bond space, just in general, maybe on the shorter and middle portion of the curve rather than the long end. And that could also be a little bit conducive for equities here. If you're looking at the long-term readjustment and status quo, this is obviously a little bit different. I think we did see a little bit of a flare up right around when the tariff talks were really kind of heating up, where the market kind of saw this disjointed nature in pricing from yields to equities as well as the dollar. It doesn't seem like that's occurring this time around. But once again, they're looking at a potential pick, and this report is saying that it could be as early as September or October to have this pick really kind of being highlighted. Maybe it's not going to be official, but maybe it does get floated and signaled by the White House. And that could actually have a different dynamic when it comes to the Fed. But the Fed will eventually cut. It just kind of depends on the data. I think President Trump's also very upset at Powell's testimony in the Senate, where he kind of highlights the tariffs being one of the major issues for their inflation guidance moving forward, and also talking about the labor market, how that's tightening up because of current immigration policies. So obviously there's going to be a little bit of a rift here. Let's see how this all plays out, but you're not seeing yields moving higher and bonds selling off because of this. You're actually seeing the opposite.
Okay, it's been interesting to watch this, especially because you mentioned the dynamic between, because obviously the Fed's goal is not to be political, and Trump is the one who initially, President Trump is the one who initially appointed Fed Chair Jerome Powell. But now, how should investors be thinking about this when it comes to, kind of that political tie-in to Fed policy?
Yeah, I don't know if the market's really pricing that out when that does occur in May of 2026. That'll probably be a May problem rather than a near-term problem. I think the market's really just desiring rate cuts at this point in time, and whoever that they do pick, obviously, it seems like it's going to be pretty apparent that they're going to be very aggressive when it comes to rate cuts here in the near term, trying to keep monetary policy fairly loose. Diane, I think the biggest risk that you have, and this will be a longer term risk, is if you do have somebody that's a little bit more political, somebody that does want to kind of loosen rates very aggressively. Do you go back to that 99, the 90s style Alan Greenspan type of monetary policy, which if you look at economic growth and equity performance, it was actually pretty good. But at the end of the day, it also kind of created some systemic issues within the credit markets and the housing market. So you can run an economy hot, but you can only run it hot for so long until something does crack. Once again, that's a 2026, 2027, 2028 problem that the market could price out. At least for now, it could be actually conducive for equities if you do get somebody that's a little bit more flexible when it comes to their policy stance.
And then KG, let's talk a little bit about some of the price action that we saw, momentum that we saw. Yes, the S&P 500 had finished essentially a little change yesterday's session, but you had Nvidia riding this wave of, overall bullish sentiment, hit a new record yesterday. Shares indicating higher today. What are you watching here for Nvidia?
Yeah, Nvidia is obviously getting a fair amount of investor interest here over the last couple of trading sessions. What is actually very interesting is it has made new all-time highs, and you are seeing a breakout and trying to actually continue to the upside. It's actually up another $1 or $2 earlier for this morning here. You have the optimism from Loop Capital. Obviously, we are getting closer to new all-time highs. People go back to the things that they do know. And there was a report early last week around the potential of the United States government actually pulling some of these waivers to sell chips to China. It seems like there hasn't been any follow-up with that, so maybe the market's also discounting it. You also have the mechanical nature of this move as well. You have a significant amount of options trading, especially yesterday, on this name. And if you do have aggressive enough call buyers out there, you can also create a little bit more of a squeeze to the upside here. So trying to break that neckline, it has done so. Let's see if it's going to follow through here. But I think the market's really discounting a lot of the headwinds, especially when you're looking at the industry-specific headwinds and looking at valuations and looking at a risk on tone just in general. And this was one of the bigger risk on trades that we saw before the pullback.
Okay, and then let's talk about your levels on the S&P 500, 60.92, same as the day before. Again, finishing little change. But where do we go from here to the upside and downside on the S&P 500?
Yeah, so for the first level to the upside, 61.30, that is getting some interest this morning. You are seeing some call buying interest at the 61.50s. So we might get to all-time highs today. Who knows? Into the downside, you're looking at 60.55 as your first major area of support, Diane.
All right. Thank you, KG. That's our Kevin Green, Senior Markets Correspondent here on Schwab Network.